Hi again, I'm Jim Epley, President of JD's Tax and Financial Solutions. Now what a balance sheet does, it really tells the overall health of the company. It tells if the company has net equity, meaning if everything was sold off in the company and all the creditors or everybody was paid that was owed money to, what would be left over? It's as simple as that. So if the company has $100,000 in the bank and it owes $50,000 to creditors, whether that be credit cards or loans or what have you, there would be $50,000 left over. So that would be what's called the net equity of the company. So the owners of the company, the shareholders of the company, that's what their equity would be. That's what their net worth would be in the company. So I want to show you this on paper rather than just give this to you verbally. I want to give you a little bit of an explanation of this, of an actual balance sheet. I want to show you what a balance sheet is so you can see with it, so you can think with it, and hopefully when all is said and done you have a better understanding of what a balance sheet is and how it relates to your business and the overall health of your business. So here we go. Okay, so what I'd like to show you now is the balance sheet. We're working with a company called Aqua Bamboo, and this is what's called the balance sheet for the company. Now what we have here, a balance sheet shows a snapshot on any particular day. At any particular point in time you can create a balance sheet. And that is simply a snapshot of exactly where the company stands at one point in time. So for this particular time period here, we're going to show you what are called the assets of the company. So the assets, you'll have current assets and fixed assets. The current assets would be your bank accounts, your cash on hand. It's anything that the company would have access to in the very short term. Money that the company would have access to in the short term. Also accounts receivable, money that's owed to the company, would go in here also. In this particular case, we have $4,800 in current assets. In fixed assets, we have $695,000. And that's made up of the homes and other property owned. Remember, we're working with Aqua Bamboo LLC here, which is a rental company, so it holds rental properties. So the majority of the assets are the fixed assets, which is the property of the business. Those total assets, between the cash and the buildings and the property and the bank accounts, equals $699,000 in this particular entity, this particular company here. So that's the total assets. Now we come down to the liabilities and equity portion of the company. The liabilities, that means anything that the company owes money on. Anywhere the company owes money, those are going to be the liabilities. The equity would be what's left over in the company, which would be what the owners have in the company. So we'll take the liabilities. We have current liabilities of $26,000. That's made up of basically credit cards and taxes that are due. Anything that's really going to be short term would typically need to be paid in 1 year or less. That's what's going to show up in your current liabilities section of your balance sheet. Then you have your long-term liabilities. In this case it's $739,000. Those are anything that's going to be due over a long period of time. So that's going to be your mortgages and any other loans that are due over a period typically longer than a year. So when we take the total of those two, the current liabilities and the long-term liabilities, that is our total liabilities. In this particular case, that's $765,000. So since this particular company owes more than it owns, it has something called negative equity. In this particular case, it's negative $66,000. Now what that means is the net worth of the business. If all the assets were sold or liquidated, that's all the assets. Remember, if the bank accounts were closed out, the homes and property was sold, what we'd have left is simply cash. We'd have $699,000 of cash. Now, if that were the case, and we wanted to pay off everything that was owed, the credit cards, the taxes, the mortgages, the other loans, we would have to pay off $765,000. We'd be short by $66,000. So basically, if all the assets were sold and all the liabilities, the credit cards and mortgages were paid off, we'd be in the hole $66,000. So in this particular case, this Aqua Bamboo LLC here, this company on this particular date is what is known as insolvent. That means it's worth less than what's owed on it. An insolvent company is not the sign of a healthy company. So that's really what you're looking for on a healthy company. You're looking for the equity in the company. You want this equity number here to be a positive number. This is what mortgage lenders are going to look at. This is what banks are going to look at. If you're wanting to get credit or if you're wanting to get a mortgage for your company, the balance sheet's going to be very, very important for the bank or other lender to analyze your company and look at the overall health of the company. So I hope that gave you a better understanding of what a balance sheet is. If you have any other questions on a balance sheet, on a profit and loss statement, on general finances of your company, give me a call. I'm Jim Epley, President of JD's Tax and Financial Solutions, and I'm here to help you. Thanks again for watching.